Chapter 6, we went through and completed a worksheet. And the worksheet is the first step at the end of our fiscal period. Before that, chapters 1 through 5, we really learned about journalizing transactions, accounts, making sure our accounting equation is in balance, knowing our normal balances, taking information from our journal and putting them into our ledger. And then a worksheet is the first step at the end of a fiscal period for our business to determine whether or not we've made money or lost money. And we know on a worksheet if we've made money or lost money because of our income statement columns. But let me tell you that a worksheet is not a permanent financial statement. What does that mean? If you're going to invest in any company on the stock market, they have to put out an annual report. In that annual report, they have to have permanent financial statements, statements that stay with the business year to year to year to year. Okay, a worksheet is not one of those statements. Accountants don't have to prepare one. And now you're thinking to yourself, Mrs. Grassel, why did we waste a whole 2 weeks learning about worksheets then? Worksheets get us ready and make sure that things balance before we do our permanent financial statements. Now, think about it. In our challenge problem, we had some issues because some documents were missing and we had to figure out what our account was for capital. If we had not done the trial balance on a worksheet, you wouldn't know if your debits and credits equal for your accounting equation. So therefore, we would not be able to get the rest of our financial statements to come out. So we use the worksheet to get us ready to prepare these permanent financial statements. And the first permanent financial statement that we're going to create is called an income statement. Okay, so when you think about a worksheet, we have a trial balance, we have our adjustments, and we have an income statement, then we have a balance sheet working left to right. Okay, the first permanent financial statement we do is an income statement. Guess what permanent financial statement comes after that? Balance sheet. And that is really this chapter. We're going to learn about an income statement and a balance sheet. We get a lot of our information from our worksheet, though. Okay, but when we look at this financial statement, I want us to look up here at the board. We'll notice here on the very top we have 3 lines. The 3 lines on the top go for the name of the document, or excuse me, name of the business, name of the document, and then the date. Now, an income statement. Do we determine how much money we make every day or for a length of time? Length of time. It wouldn't make much sense for me to figure out if my business was profitable on Monday. Oh, on Tuesday I lost money, but on Wednesday I was profitable, but Thursday and Friday I both lost money. That doesn't make sense. We look at it over a period of time. So we know the date for an income statement is always going to be for period ended, for month ended, for year ended. It's always going to be a length of time, not a specific date. Okay? And then we look here at our columns. Now, this is our first statement when I have eyes up here, please, that we have number columns, but we have this additional column right here. Cody. Thank you. And basically, we have 2 spots here for our numbers. And we are going to get these numbers from the income statement column on our worksheet. Okay? Not the trial balance, because our trial balance does not have any of our accounts that are adjusted on there. The rest of them, when you take a look at it on our income statement, that's really where we determine whether or not we made money or lost money. So here on the left-hand side is going to be where I put our account numbers. But notice these column headings. Does it say debit or credit? We do not have debit and credit columns on our income statement. But what we have is we have individual amounts and totals. So when we want a total of something, it'll go on the right-hand side. When we have individual amounts, they're going to go on the left. So when you think about an income statement, we have 2 account classifications that are being affected on here. How do we determine whether or not we made money or lost money? What classifications? Revenue and expenses. How many revenue accounts do we have? 1. And then what is our revenue account? Sales. Okay, so we know sales is going to go in the right-hand column right away because we don't have multiple sales accounts. But if you think about Best Buy is going to have multiple sales accounts because they're going to keep track of appliances, computers, TVs, movies separate because they want to know how much money they're making in each area. Would you agree? So as businesses get bigger, they will have multiple types of revenue accounts. They'll have them grouped by departments. But right now in our simple accounting land, we're just going to have 1 sales account, so that number would go on the right-hand side. And what's our other classification that we put on here? expenses. Okay, so we have multiple expenses that we get from our worksheet. All of our titles are going to be listed here, and we're going to have our individual expenses listed here on the left column. And then we're going to have something called total expenses, and that total expense will go here on the right. So if I take my sales minus my total expenses, what would it give me? Net income. And you can see that they filled those words in here for you automatically. The other thing that we do is we always take any of the numbers in the right-hand column and divide by sales. And that's going to give us our component percentage. Our component percentage is how we can figure out whether or not our business is doing okay. Now, each different type of business has acceptable component percentages because some businesses have higher expenses in it than others, okay, just by the nature of the business. So it doesn't, what it allows you to do is, for example, if I'm doing a lawn care business, I would compare my component percentages to other lawn care businesses to see how my percentages are doing for expenses and net income. Restaurants will compare themselves to other restaurants. Retail businesses will compare to something else too. That way they can see how well they're doing. And then it also allows you as a potential investor, because remember I stated that an income statement is a permanent financial statement. If you go to Best Buy's annual report, you will find an income statement. It is not going to be that short. It'll be really big. But you could also go through and compare Best Buy to, who would be another company you'd compare Best Buy to? What's that? Walmart. Okay. You can compare Walmart's income statement and Best Buy's income statement, and you can look at their component percentages. Who's going to have a greater amount of sales? Walmart, just because there's more stores. Would you agree? But when you look at their component percentages, it levels it out. Instead of looking at millions of dollars, you have a percentage where you can go through and compare and say, oh, their expenses are a higher percent than Best Buy's, or vice versa. It allows you to compare businesses taking out the millions of dollars and just putting in percentages. This also allows accountants to go back to their people that they're doing the financial statements for and give them recommendations based on it. Okay? They can say, well, your component percentages for total expenses is a little high. We have to take a look at reducing it. Or your component percentage for net income is not in an acceptable range for your type of business. We need to look at changing that. So even though a business could have a net income, it might not be the targeted amount of net income that a business is going for based on their component percentage, and then we make changes based on that. Sound good? Okay, so Chapter 6 is relatively short. We have 2 sections on it. That's why I'm taking a look at, we should be able to have a test this week on Friday. And it is my plan for this week that I'm going to be teaching on Monday and Tuesday. Wednesday and Thursday would then be work days, but also don't forget, if you have anything that you need to work on for your accounting scrapbook, you can go ahead and bring those in, and I'll go over that with you as well. Okay? So let's take a look at our directions for work together. A partial worksheet for Darlene's delivery service for the month ended July 31st is given in below, also given in the blank form for completing income statement. Your instructor will guide you through the following example. It says, prepare an income statement for the month ended July 31st of the current year. Calculate and record the component percentages for total expenses and net income, and round the percentage calculations to the nearest point 1%. Okay, so we can see right here, we know that we have to use our worksheet because that's where we're getting our numbers from. So let's start at the top. The very top thing we have is Darlene's delivery service, and this is an income statement. And it does say we're doing it for the month ended of July 31st. Okay, so not year ended, make sure it is for month ended. Now, there are 2 classifications that we use on an income statement. The first one we have is revenue, so that is the first word that goes on here. And I want to point out that when I type in the word revenue, there is no number that corresponds it to the right-hand side. It is really just a heading. And the word revenue is going to be on the left-hand side. And also the word revenue is followed by a colon, meaning below is going to be where you find your revenue accounts. And how many revenue accounts do we have? 1, and that's going to be sales. So when I type in sales, you will see that it goes there, and now the amount for sales on our worksheet is $5,511. Does it go in the left column or the right column? Right, because totals go on the right, individual amounts go on the left, and I can't do my percent of sales yet. Okay, so I am done with my revenue account. So the next below sales, I'm going to put in my next heading, which is going to be expenses, followed by a colon as well. And then I have 4 expenses that I need to go for, and that's going to be advertising expense, and that's going to be for $821. Insurance expense for $300. Miscellaneous expense is going to go for $347. And supplies expense is going to go for $713. And all of those numbers go in the left-hand side. Now, they already started this assignment by having the word total expenses in there for us. So what I need to do right now on the total expenses line is I need to add up 821, 300, 347, 713, get that total, and that total is going to go on the right-hand side. Does anyone have that number for me? I'm sorry, say it again? 2,181. Okay, so there's my total expenses. And now what this does for me, now notice, I'll have 5,511 and 2,181 both on the same column. Notice, below supplies expense here, Aptly automatically put in a single line here. It also did below total expenses. Why? I know it does it for you, but you need to know why. What are we doing there? Doing some sort of math, would you agree? The line there indicates, hey, we're either adding or subtracting. Now, when you take a look at total expenses here, I'm not going to take 5,511 and add 2,181. What am I going to do? Subtract, and I'm going to calculate, and we can see already my total revenue is greater than my total expenses, so we know it's going to be a net income, and they already filled that in there. So what is my net income? Did anyone calculate it? 3,330. This is the spot where you figure out, did you do your net income correct on your worksheet as well? Okay. Now, it automatically put a double line below here. This double line should go all the way across both columns because it's saying that this number equals, and what does it equal to? Where else should we get 3,330? On the worksheet. Would you agree? Now here's the other thing, is we know that this net income is also going to be correct because we need to use this net income on our balance sheet. So that's the other way that we can double check that it equals. Because we always know in accounting there's always a way to prove it. Okay, so now our last set of directions for our income statement, it says to go through and calculate our component percentages for total sales, total expenses, and net income. And this is how we do this. We take these numbers that are on the right-hand side and divide by sales. So I'm going to take 5,511 and divide by 5,511. What was my percentage? 100%. It's always going to be 100% for that top one. Okay, we're happy little accounting land, so it's always going to be 100%. And it should put in a decimal of 0.0 for you automatically. Now, I need to do the same thing for total expenses, but I'm going to take 2,181 and divide by 5,511. And what percentage do we get for that? 39.6. You are going to need to do this, okay? So make sure you know how to, you can do 39.6. Instead of just copying the number up there, make sure you know how to calculate. You're going to do the same thing for net income. Take 3,330 and divide by 5,511. And what does that give us? 60.4. And right now, in our simple, happy accounting land, these two numbers should equal what? 100%. What does this tell us? Okay, when I take a look at my total sales for this business, Delaying Delivery Service, for every dollar she brings in, what is profit? 60 cents. For every dollar that she brings in, 60 cents is profit, and 40 cents roughly covers her expenses. Is that a good thing for a business to know? Yes. So that's why we convert this into our percentages, because we can then make decisions. If you take a look at a business that has a large amount of profit, but when you take a look at your component percentage for net income and it's 12%, what does that mean? Even though they made a large amount of money for net income, but their component percentage is at 12%, how much of their dollar that they bring in is going to cover their expenses? Huh. Isn't that a lot? When you think about it, every dollar you bring in, if 88 cents of it is going to cover your expenses and you're only keeping 12, that is a lot. But people will just look at the amount of net income they have and say, oh, they're making money, they're doing fine. But no, 88 cents per dollar is covering expenses, not going into the business. When we take a look at this one, it's 60%. Now remember, there are some businesses that have higher expenses that need to be covered than others. So you have to figure out what is an acceptable component percentage for that type of business. But that is why we have component percentages, because it allows us to see, is our business doing well? Some of you may think, oh my God, $3,000, that's not a lot, or some people might think $3,000 is. But if you round it back to $1, that gives you a better idea. Go ahead and try on your own.